Welcome to the BuyBox Experts podcast. We bring to light the unique opportunities brands face in today's e-commerce world.
Hi, this is James Thompson from the BuyBox Experts podcast. Today's episode is part of a special series of interviews that we have done to dive deeper into the recent phenomenon of private equity companies and FBA aggregators investing in private label brands that are leveraging the Amazon sales channel. As part of this series, we interview a wide range of investors, brokers, consultants, and entrepreneurs that have recently sold their private label brands. We peel back the layers on what's happening in this new investment space and look at how private label brands are finding financial success through the building and eventual sale of their online businesses. For 3 weeks, from mid-February through early March, we will release a new episode every weekday on this topic. Sit back and enjoy today's episode. Hi, I'm James Thompson, one of the hosts of the BuyBox Experts podcast. I'm a partner with BuyBox Experts and the former business head of the Selling on Amazon team at Amazon, as well as the first account manager for the Fulfillment by Amazon program. I'm the co-author of a couple of books on Amazon, including the recent book, Controlling Your Brand in the Age of Amazon. Today's episode is brought to you by BuyBox Experts. BuyBox Experts takes ambitious brands and makes them unbeatable. When you hire BuyBox Experts, you receive the strategy optimization and marketing performance to succeed on Amazon. BuyBox Experts provides executive-level advisory services with expert performance management and execution of your Amazon channel strategy. Go to buyboxexperts.com to learn more. Before I introduce our guest today, I'd like to send a big shout out to the team at Disruptive Advertising. For off-Amazon advertising, Disruptive Advertising offers the highest level of service in the digital marketing industry. Focusing on driving traffic, converting traffic, and enterprise analytics, Disruptive helps their clients increase their bottom line month after month. Check out disruptiveadvertising.com to learn more. Our guest today is Mark Daoust, the founder and CEO of Quietlight Brokerage. Founded in 2007, this brokerage helps entrepreneurs in the online and internet business sectors to sell their websites for maximum value. Mark's team has worked with hundreds of brands that sell on Amazon. Mark joined us on our podcast back in early 2020. Then COVID happened, and then a major push by new investors and money rushing into the market to buy Amazon private label brands. Mark has a front row seat to what's happening with all these new developments. So I'm very pleased to have Mark back to talk today about what's going on with all this excitement around brands investing. Mark, welcome, and thank you for joining us today on the BuyBox Experts podcast.
Thanks for having me on. It's good to talk to you again, James.
So Mark, let me start by asking you about this new wave of investors that are surfacing to acquire these FBA private label businesses. FBA private label businesses are a hot commodity, but they've been around for a long time, and yet the interest is fairly new in this last year. What do you think's been happening that's generated all this recent interest?
Frankly, I think press. Some of the press that some of the companies have received really added a lot of fuel to the fire. Now, look, the conditions have been right for this for a while, and we know just with any product or any industry that needs adoption, if you take a look at an adoption curve, there's usually kind of this underlying current at the beginning, and then you start to see that graph of adoption hockey stick up, right?
Yep.
So this isn't unusual for us to have this happen. We've really had a perfect blend of events happening here. We had some press going on. So we had these aggregators out there, these guys that are conglomerating these brands. They already existed. Some of them did a good job of creating some press on a basic thesis. I'm thinking of like One-on-One Commerce back when they were out there saying we're going to acquire 101 $1 million Amazon companies, right? That was their thesis. It was really catchy. So it caught some eyes. COVID is another element here that was just another recipe or a little ingredient in this recipe. And so this combination of press, Thrasio receiving $1 billion valuation and getting splashed all over the news, Perch raising an ungodly amount of money with their raise, that legitimized what had the attention of a lot of investors to begin with. And then throwing COVID on top of that, where we see this seismic shift. And let's make no mistake about it. We're at the beginning of this shift. That we're seeing. We've all seen it in the stock market. The NASDAQ was up some ridiculous amount this past year. It was like 46% for the year, which is insane when you consider the dip. This shift is just continuing, and it's focusing in on this Amazon FBA space. So we're talking to a lot of firms that are new, they just raised funds, or they are in the process of raising funds. And so that's what I'm attributing most of the increased attention to.
So what do you think is going to happen as the number of these aggregators continues to grow over the next couple of years? I would think, that's good for a business like yours, as companies that are looking to sell are all running around looking for brokers who can provide opportunity to access some of these acquisitions.
Well, funny you mentioned that. We were actually talking about that internally here at Quietlight today, because some people are coming to us, some people are going direct to the aggregators and trying to get the best deal possible,
Mm-hmm.
which I get. There's some arguments there as to whether or not that's a good thing for people to do. Obviously, I would argue maybe not, but I'm biased. But what do I think is going to happen? Look, I think if we take a look at the raised funds that are out there is a huge sum of money that is sitting, waiting to be deployed to acquire Amazon FBA businesses. There will be a wealth transfer that occurs here. Now, the problem that the aggregators have is deal flow. And look, this has been a problem for as long as I've owned Quietlight Brokerage, going on 15 years now. And that is, how do we get more deal flow? And all the buyers want to know, how do I get more deal flow? Now you throw it into an aggregator that has a large fund that is premised on the idea they're going to do volume acquisitions.
Yes.
That becomes a problem. So what's going to happen? This is supply and demand at its finest. We will see some price pressure moving up. It'll be interesting to see how that plays out in actuality, because the investment theses require that certain amounts are paid for earnings. But with a lot of the new entrants in the game trying to break in and get those first deals done, I do think we'll see some price pressure take effect.
I've talked to a number of these aggregators, and it's curious to see the natural tiering across those companies in terms of the size of the targets they're going after. As a broker, I imagine you're seeing some of that as well, where there are only so many companies of different sizes available. How do you think about the world of private label sellers when it comes to big, medium, small brands? I feel like Mama Bear, Papa Bear, and Little Baby Bear. How do you think about these different private label brands?
Like, where's the strata that where the lines that I draw?
Yes.
Yeah, sure. So we think about it in terms of enterprise value typically, right? And we can have a discussion on that if it makes sense to do so. But we're looking at sub $1 million would be one category, and we put that in a big pool. Our target client tends to be a little bit larger. We're not working with brands that are valued at 100,000, for example, or even 250,000 would be about the lowest that we typically work with. So sub $1 million, and then I see the 1 to 5, 5 to 10, and 10 plus. And then there'll be another tier probably above that, but we don't work a lot above that. Our largest deal is 25 million. And I think we feel very comfortable maybe up to 30, 35 million for enterprise value. But in terms of the strata, pretty even numbers there, 1, 5, 10, and above. As far as where does that equate to revenue wise, that begs the question of valuations. I'll just say break up the revenues into similar territories, and you can probably start to get a sense with maybe adding another strata on top of 20 million for revenue.
When I look at some of these very large brands, guys that are doing 50 million plus in annual sales, if they're getting a 30% gross margin and they're able to get, whether it's a 4, 5, 6 multiple, that starts to become a very, very large acquisition number. And quite frankly, one where your FBA aggregator may not have the funds to support buying a company that's going to cost them $80 to $100 million. How do you see some of these much, much bigger brands potentially exiting and being able to enjoy some of this new excitement that's happening with these investors?
Frankly, I don't think that's a difficult question. Private equity. Private equity they're interested in this space. The problem with private equity is that for a lot of these PE firms, doing a $10 million deal doesn't move the needle. It's not enough to really attract their attention. They would have that as a dip a toe in the water, maybe a bolt-on if they have something that makes sense to do. But for, there's a group of private equity that won't touch the space just because it's not big enough. And so I think you are looking more at the private equity sort of exit, which, look, there's an argument to be made that these aggregators are a form or a derivative of private equity, right? It's just, same sort of concept still at play. So I think for those 50 million plus revenue companies, there's a lot of attractiveness towards this online space. And I'm not saying anything groundbreaking right now, but that attractiveness is attracting the attention of institutional money. Financial Times recently had an article on this space, on the aggregators and Amazon FBA being acquired. I mean, this just shows the increasing awareness in serious markets, in the serious institutional money, looking at the space differently, and not seeing it as risky of an asset maybe as it was looked upon in the past. And look, we've run into this on my own. I had a deal that I was completing last year for about $15 million, where I won't say who the buyer was, but the buyer was a traditional institutional buyer, right? Definitely falls in that category. And the deal ended up being churned down because of platform risk, which is what we were hearing previously.
Yep.
But that's decreasingly become a concern as we're seeing people move more to this online world.
So let's go back to your point about deal flow. There are literally thousands of these private label brands out there. And one of the things that continues to surprise me a little bit is how many of these owners don't realize they're sitting on an asset that, under certain conditions being right, someone's actually going to pay them a decent amount of money. And how do you get, as a broker, how do you start to proactively go and find companies and tell them the story that, listen, you're sitting on something that somebody may want to buy, as opposed to just waiting for people to come to you and say, hey, I've decided I want to sell. What can you get me for this business?
Yeah, that's a great question, and one that we're trying to unlock as well. There's a bit of a problem with the brokerage industry in general. I'm going to rag on our industry for a moment.
All right.
And say, well, there's a lot of ambulance chasers, right? I, as the owner of Quietlight Brokerage, have received email solicitations from my competitors asking if my firm is for sale because they have an interested buyer, right? So they said, hey, is Quietlight Brokerage for sale? Because we have a buyer that's expressed interest. And then I reach out to them, hey, so-and-so, I know them personally, got this email, and oh, don't worry about that. That's just our prospecting email.
Yeah.
Right. So we've developed a bit of a reputation as an ambulance chasing industry. And we've made the conscious decision for a long time to not engage in that practice, because I felt it was disingenuous to say we have a buyer interested in your business, when the truth of the matter is, the nuanced truth is, yeah, we probably have a buyer interested in your business, but I don't have a buyer that specifically reached out to me and said, contact this person.
Sure.
That's the nuanced truth. So the question of deal flow. In the past, we have worked purely on an educational basis. Go out there, we Prosper Show, go out, give talks at Prosper Show, or sponsor Prosper Show, talk to people and try and educate them on the fact that they are sitting on something valuable, and teach them what makes it valuable, what makes it not valuable, and how can you maximize that value. That's been our thesis for a long, long time. And we're going to continue with that, double down, doing everything we can to get as much education out there. We are starting some outreach, though, this year. We're going to play around with it for about 6 months, maybe 9 months, and see what we can do. But we're going to try and do it differently. We're not promising people that we have a buyer, waiting in the wings.
Right.
They just want the same sort of educational approach. This issue of deal flow, look, this is, again, everybody's dealing with this problem. The aggregators have the advantage of saying, I'm the buyer and I want to buy your business potentially. And so that's more of an immediate sort of outreach. The problem for the sellers is, I truly think that these aggregators, by doing this, are generating a lot of what we call here at Quietlight the ignorance discount. Right? Sellers who aren't prepared and are literally leaving hundreds of thousands or millions of dollars on the table because they don't know how to prepare their financials properly. They don't know what a good deal is. And even if they go out and ask, like, what should I be getting? Hey, they offered me a 2.8. And somebody says, oh, you should get a 3.2. Well, my business partner and I, Joe Valley, we just did a whole podcast on the problem with multiples. We think multiples are this somehow objective measure that we can say, oh, look, company A is offering 3.8, company B is offering 3.2. 3.2 on what? Right? And how do you calculate that? And what do you include in that $15 million deal that I just mentioned I did last year? Depending on how you count the numbers, that could have been a $9 million deal. That could have been a $12 million deal. That could have been a $14 million deal. When you throw everything in, it's 15 million. And that sounds a lot more impressive, doesn't it?
Yeah.
So anyways, that's my little rant.
So it's in talking to some of the aggregators, they're starting to get very proactive in developing software and figuring out which brands look interesting. and proactively reaching out to these companies who may or may not be thinking about potentially selling. You're now competing with their proactive marketing efforts, trying to insert yourself where you would be a trusted advisor helping with the deal. Where do you see aggregators potentially not having the same kind of advantage that you would have in terms of being able to approach a brand directly?
That's a really good question, and I'm not sure if I have a full grasp on the answer there. Well, the one thing I would say though is that the buyer-seller relationship initially is somewhat adversarial, right?
Mm-hmm.
Because the buyer wants the best deal, the seller
Yep.
wants the best deal. Now,
Yep.
traditionally, the broker and seller relationship can also be adversarial to a certain extent
Yep.
because everyone has an angle. We've tried to build our reputation on something opposite of that to say, look, we have an angle. We're going to be very transparent about it. And then we're going to try and put it aside and just do what's best for you, the client. I would say it's a bit more muted, our relationship with the seller as far as being adversarial, because at the end of the day, we have to be cooperative. And so we're going to benefit along with our clients by getting them the best deal possible. So that would be potentially our advantage. And really, it's incumbent on us. And this is with our outreach, right? Because you're right, we are going to be competing directly against the aggregators.
Yes.
So where's our advantage going to come in? Well, our advantage is going to come in by really being more useful, more informative, more unbiased, and more transparent than anyone else out there. And hopefully that wins at the end of the day. I mean, at the end of the day, yeah, I want people to sell through Quietlight. Okay, that's how I make my money. That's how I, raise my kids. That's obviously what I want.
Yep.
But for the altruistic side of me, I want to see good deals done, and I hate to hear of somebody taking $700,000 for the business when they could have taken $1 million. And this happens a lot, right? So I don't want to hear that because I'm an entrepreneur myself. I've sold businesses, and if I knew that I left 300 grand on the table simply from an accounting error, or something that I didn't know you could do or should do, or something you should ask for, that's something I don't want to see.
So let's take this through. I'm a private label seller. I'm thinking maybe I want to sell my business. I contact your firm. Take me through, what does that communication journey look like, whether I actually end up selling or not? The moment I engage with a broker, what should I expect as a seller to be talking about? What should I be expecting that I'm going to have to go back and do as homework? Take me through that journey. Because quite frankly, I right now, as we're having this conversation, I think of so many of these companies that don't realize that maybe they can sell and get a life-altering amount of money if they sell their business. Knowing what awaits you in terms of what that journey is going to look like, that's really important. So take me through the journey when it comes to that first contact with a potential brand.
Great question. And I'll speak for Quietlight, what to expect with Quietlight specifically.
Yes.
And really, it starts with that initial phone call, which is really kind of a mutual feeling out process. We want to learn about your business and how you've run it, because every business is very unique. And at the end of the day, when you want to sell, you do have to conform to some extent into what the marketplace or these buyers are expecting if you want to get the best price possible. Conformity is in hitting certain metrics is what you're looking at. Keep in mind, these aggregators, they're trying to do a lot of deals. So they're looking at hundreds and hundreds of deals per month. And so if you don't conform, you get tossed pretty quickly, right? All right. So that first call is a discovery process on our side. How close do you conform to the current market and how far do you deviate from it? Secondly, it's an education process on our part. We want to give you in that first phone call, my hope is that you get a sense for what the value of your business is right now. Rough estimate, because you can't give a specific valuation just in a single phone call, but a rough idea. But more importantly, what are the big things to work on? Like, do you have major issues with the transferability of your business? So you have major risks, vendor risk with your business? Are your trends bad? Are you, what have you? Are your books not set up correctly? So it's an education process where we can try and teach you what's going to make your business really valuable. Like, what are people going to be excited about? What's going to push that valuation up? And maybe some of the elements that might be dragging it down for you as well, especially that low-hanging fruit.
Yes.
So when you walk away from that call, my hope is that I know my business is worth about 15 million to 18 million.
Sure.
I know that I need to do these things with my books, in order to get it in order. And I know that this industry, this niche that is really good, but I need to demonstrate X, Y, or Z, right? That's what I really hope that people get from that first call from us. Now, the entire customer journey, what does that look like? If somebody is looking to sell their business and wants to go through that process, again, it starts from that same starting point. We have to have a sense of where you are generally, but then we get a lot more detailed and we dig in. I mean, we ask a lot of questions of our clients. We look at a lot of reports because we don't want surprises. Surprises are what kill these transactions at the end of the day.
So at what point do you start to become interested in a company that contacted you? Meaning there's enough credibility in the numbers, credibility in the story that you can do something with this prospective client.
Well, it starts with the goals of the client, right? I want to know what their goals. Why are they thinking about exiting? That's important because I don't want somebody to back out. I want you to be committed. And the fact is, you get one chance to sell your business. You might think it's a great decision right away, but you might be going through the process and start having second thoughts, and that's fine, legitimate. Like, it's your business. So you hang on to it if you want to keep it. But I want you to go through that process before everybody starts committing their time. So I start to get interested if I know, look, this person is ready to sell and it's in their best interest to sell. It's their decision, but I want them to be convinced of that. Secondly, I'm looking for defensibility of that revenue. I want to see a business that can sustain in the long term, not something that is going to, be here today, gone tomorrow sort of business. Third, I don't want to deal with businesses that have specific talents wrapped up in the owners. I think about when it comes to Amazon, and look, I know your clients don't necessarily fit this profile, but the flippers, right? Those guys that are bargain bin hunting and throwing up on Amazon, or they really know how to get good deals and are really practicing arbitrage. Well, that's a skill set. And I've seen a few examples of that being done at scale, which are impressive and they're usually backed by software. That's defensible, but most aren't. So I want defensibility of revenue. And there's a lot of things that factor into that: intellectual property protection, uniqueness of the idea, size of the market, and the type of market, right? Is it a fad market? So a lot of things go into that. Preparedness of the financials and preparedness of the business for a transition. Is it something else that we look at pretty heavily? Do you have clean books? Are they kept on accrual basis? Can I trust these numbers? It's pretty easy to tell upfront if you can trust numbers. And then that transition issue as well, right? If you're the one running around doing everything, that's a problem, obviously, but also the staff that you have or the different setups that you have within the business. So what starts to pique my interest? Again, it starts with the seller. I want to know, or the owner, the business owner, are they ready to sell? And that's why that initial phone call is really this discovery process. I want our potential future clients to have a really good awareness of what they're sitting on. And oftentimes what they're sitting on is something that's going to be really valuable in the future. It might be valuable now, but hey, maybe in 2 years, it's going to be really valuable. They should know that.
So what do you typically find yourself coaching or brands that you're first talking to? What are the kinds of issues that over and over you're having to say, you need to go off and do this, this, and this specifically before you're actually ready to have a responsible conversation with a prospective buyer?
Financials, unfortunately, get put in the crosshairs a lot. And I know it's not the sexiest of topics to bring up, but the number of people that are not on accrual basis, for one, or on some sort of faux accrual basis, right? So accrual basis just simply means we're recognizing revenue and expenses when they're incurred. And this most impacts your business in your cost of goods sold line. So easy way to tell if you're on cash or accrual basis, take a look at your gross profit margin. If it goes 1 month 30%, the next month 90%, the next month 110%, next month 2%, you're on cash basis.
Yeah.
Full accrual basis is if your gross margins look like January looks like 70%, 80%, 75%, yada, yada, yada. Then you get to December and all of a sudden you have a negative 10% gross profit margin. That's full accrual accounting. That's for tax purposes only, gives me no insight into the business. Okay, so that's number one. Just bad financials would be the number one area. The other areas.
So hang on. Before we move on.
Yeah.
I have bad financials. You send somebody off, you say, go get yourself this type of an accountant to go through your numbers and rework them. That's a 3 to 6 month process.
Hopefully not that long, but sometimes it can take that long. I'd say a good accountant that you're paying a decent amount of money to will get it done in 1 to 2 months. Depending on how much support you can get. My recommendation, so I've changed on this, James, since I think you and I last talked. I've often said, hire a good bookkeeper. I've modified this a little bit. If you're doing over $1 million in revenue with your business, hire a fractional CFO. It's just bang, dollar for dollar, you'll get your money's worth for that sort of investment, and they will make sure that you're doing your books properly. This is nothing against regular bookkeepers. I love them for my other business. I still have a regular bookkeeper, but they are that's a $sub-1,000,000 year business in terms of revenue. So yeah,
issue number one is your financials are in trouble. You need to go rework them. Hire someone, a fractional CFO, to get that under control. Take me through other common issues that you have to send these sellers to go off and look at upgrading.
Yeah, Amazon account health issues. It could be something. I mean, we were dealing with a client recently that received a number of not just automated warnings, but manually triggered warnings in their account. And that they had to submit like a written plan to Amazon. That's something where time is going to heal the wounds there, right? We don't want to try and sell right after we receive this manual warning. That's a problem. Yeah. So we want to get that worked out. Or if there are other health concerns, high return rate or a product defect, which sometimes happens, get those things worked out before trying to sell. Try and get a better history on that account to show this account is healthy. Transition issues would be the other area that we look at, and is a big time problem where people just aren't ready to transition. Maybe they have staff that they want to keep with them, or they don't have proper SOPs in place. And then the last thing would honestly just be trajectory. Might be, boy, I haven't even thought about this before, but I think this might be one of the biggest reasons that we turn people away. Not turn people away. We advise them, and then they make the decision on their own, right? They come to us with a business, it's growing at a rapid rate.
Yep.
And the discussion naturally goes to, here's what you're worth today, but here's what you're going to be worth in the future.
Yes.
What do you want to do, right? This is your call, your business, and the decision is often, oh, well, let me hang on to it. Let me hang on for another 6 months, and then maybe we'll get to that point of selling. And that happens quite a bit as well.
So talk me through this process of, there is a trajectory in my business. I can keep growing over the next 6 to 12 months. How do you advise brands on when it's a good time for you to sell versus wait around another 6 to 12 months and keep growing? Obviously, the individual entrepreneur has to decide for himself or herself how much more effort they're prepared to put into this. And there is a point where you get enough. You've got enough and you're ready to exit. But one never likes to leave so much on the table that the next guy that buys the company is going to go, oh, wow, thank you very much. I can double the business in 3 months.
Yeah, I mean, that's FOMO, right? This is all about fear of missing out. And that's why I've said for years, the best time to sell your business is never, if you really enjoy running your business. I mean, and it's profitable. Don't sell for financial reasons would be my answer. Or if you are going to sell for financial reasons, pick a number that is what your exit point is. And then be happy with that, or move with that. And that doesn't mean it needs to stay that way. I've been talking to a guy for a year, a friend of mine now. We've become friends. Initially, he thought he wanted to exit for 30 million, and then his business grew, and he's like, "Oh man, I think we could get like 70 to 80 million." Yeah, no, I think you could too. And then this business continued to grow. Now he's looking at an exit of a few $100 million, and that's fine. I think it's great. I'm super happy for him. He's always had a number in his head where once he gets to that point, he's going to have that gut check. Do I want to sell? That's totally fine. But I think that the question of when is the right point to exit your business, it's super personal. And I would encourage people to not look at it in terms of a money calculation, because you will always have the potential to make more from your business. You'll always have the potential to be able to exit for more. Look at it more from a life balance situation. What are your goals with this money? What are your goals from an exit? What do you enjoy doing? And from one entrepreneur to another, as I'm sure many of your listeners are entrepreneurs, take into account the fact that as entrepreneurs, we love the startup, and maybe that's part of what you need to look at. Or maybe you want to transition. There's so many different things to look at besides just the money portion, that you need to have that calculation in mind, right? Do you want to continue running the business for a while? Then do it. I don't think that we can sit here and say you should exit at X dollar amount. It really is a burnout thing. If burnout is starting to settle in, and that's real, start making those plans and try and get ahead of that burnout. Don't sell once you're burned out. That's a bad time to sell. So you have to get ahead of that. But It's a non-specific answer, James. I'm sorry, but it's such a personal decision. It's hard to answer.
The fact that it's non-specific, leads us to this whole issue of every deal is different. Every person looking to sell a business has slightly different motivations, slightly different timeframes, and so on. It's a very, very interesting issue because, quite frankly, companies are saying, I don't want to miss out on this gold rush. I want to sell my business and make my millions. Okay. But at what point is the right time for you to do that? If you run a well-run business that's got lots of growth opportunity and you're doing the right things, there's inevitably going to be somebody interested in buying your business in a year, 2 years, 5 years from now, if you're doing the right things with the business today. So
Yeah, absolutely. And it's so easy. Like if we think about it in terms of like stock investing, for anyone that does stock investing, I think buying in is easy. I think knowing when to sell, that's really hard, right? It's the same calculus that we have to deal with any of these things. And that's why, again, I think the benefit of selling a business and knowing the right time is it can be something other than a financial decision. It can be a personal decision. It can be a quality of life decision. And I think making it within that sort of paradigm is much easier to do and probably a better thing to do anyway, is to look at it more in that quality of life sort of framework. So that's my personal opinion. This is, by the way, for people that don't know me, I've built businesses, I've sold businesses, right? So I've been through this process more than once. I've bought businesses and I've sold businesses, and I get how difficult it can be. Quietlight I've owned for 15 years for a reason, right? I'm not done with it. I'm happy with it. My first business I sold after 2, because I was done with it. I was ready to move on.
yeah.
And so it's a personal decision.
Let's talk about Quietlight Brokerage. What do you see differentiating your firm from the many other brokers out there? And there are a lot of brokers and new ones coming on board every day. What makes you different in your eyes? What makes you different in the eyes of your clients?
Yeah, I mean, it comes down to the team. It always comes down to the team, at least in my book. The people that we have working with Quietlight Brokerage, I think, are some of the most experienced entrepreneurs in the world. You just have to look at like a Walker Diable, best-selling author of Buy Then Build. It's been a bestseller for over a year now, sold over 30,000 copies as of this recording right now, which is a ton of books. He also has experience as a movie producer. He recently was nominated for an Emmy. And oh yeah, he bought 8 companies in the 7-figure range before he came on board with Quietlight. You take a look at Brad Wayland, who had the second largest custom t-shirt printing business in the country. He's bought over 28 content businesses. He's an extremely effective investor. Jason Yelowitz, who's done private equity raises on his own, once had a company that was valued upwards of $30 million. He's been with me as long as anybody. Down the list, Amanda Robb, featured in Time Magazine for her work with Pure Pearls and had a documentary done. So the expertise of the people. So what makes us different? First and foremost, the expertise of the people. Second of all, the commitment that we try to bring to the table of, again, doing the right thing by our client. And I know this is such a cliched sort of thing to say, like, oh, everyone wants to do the right thing by their client. But there's a reason that I like working with successful entrepreneurs, because they do this mainly out of the love for what they're doing, right? Which means we like to do good deals. We love to work with entrepreneurs, and we love to tell people what they could be doing with their business as well, so that they make the right decisions. And that permeates down to hopefully giving advice and feedback, which truly does work in the best interest of our clients. Where we see the difference from our clients, both on the buy side and the sell side, is in the trust. And I know, again, trust is something everybody can say, and I have a general rule. If somebody says, trust me, I generally don't. So I'll point to the fact that, when we survey our clients, it's something like 9 out of 10 of our buyers want to buy from Quietlight over any other brokerage firm in the industry, because they trust the transparency of the data that we have.
Yep.
Our net promoter score is in the 70s for our company, which is extraordinarily high. It comes down to trust and being transparent with our process. And that's what we really live and die on, is our reputation. And that's what we hope to. We're not going to be the largest deal broker. We're not going to be the largest volume, I should say, brokerage firm out there. We never will be, because our model doesn't allow us to scale like that. But we don't want to be either. We want to pick great businesses to work with, bring great businesses to the market. And we've been able to do it. I mean, last year, we set a new record for closings. We just got the numbers in. We did $115 million in closings on behalf of our clients.
Wow.
The year before, we were at 70 million, or 65, 70 million. So it's playing out in real time as to being effective. And yeah, That's the answer. I could go on. I won't because I don't want to bore your audience.
I want to finish our discussion today with sort of a broad observation. I'd gone to business school. I worked at Amazon. And yet when I left Amazon, the opportunity to work with so many entrepreneurs who are definitely not cut from the same cloth, who all have these different kinds of ideas of how to build a business and how to find customers. There are so many different types of models out there that people use. And quite frankly, some of them leave me scratching my head. Some of them leave me amazed. When you look at your journey working with entrepreneurs, representing them, helping them, supporting them, what are some of the aspects of this type of interaction that has most surprised you?
Boy, that's a big question. As far as the clients that I've worked with, and
just the opportunity to work with entrepreneurs who have some good ideas over here. They may not necessarily have good ideas over here, but all in all, you have to be programmed in a certain way to say, I believe enough in myself that I'm going to build a business myself, and I'm going to get people to believe in me when I offer them product or services. It's a little bit more risk seeking than many people would ever want to take on.
Yeah, absolutely. I got to tell you, James, it just kind of sprung this in my head. I've often wanted to reach out to entrepreneurs and see if we could get everybody to share their worst domain ideas, because I know we all have this big trash bucket of domains that we own for business ideas that at one point we're like, this is gold. And then you look back and like, what was I?
Yeah.
Anyways, you're right. It does take a special breed. And I think it's frankly one of the more rewarding things of working with Quietlight Brokerage is the fact that we get to work with some super interesting people, some super intelligent people. And I think the biggest surprises I've taken away have been, this is completely self-deprecating, but completely real, to learn how much I am not the smartest person in the room. I have constantly worked with people that are so intelligent and have such a diverse range of skill sets. Let me give you an example. Logistics. I owned an e-commerce business for a little bit that was selling heavy gun safes, for hunters and stuff like that. These were big things. And when I was trying to set up the shipping, and this was using Magento, so this was before Amazon was really taken hold. I had to figure out how many stairs did we need to take this down? Where was this? Where were we located? How far away from a major city center it was? Did you want us to unpack this thing? Oh my goodness, it was a nightmare. I couldn't stand it. It was just this logistical nightmare that I hated. It's not my strength. Rewind 2 years ago, I worked with one client. He sold just kind of a commodity item where at one point, during his busy season, he would sell 1 million pieces of this commodity item every single day. I mean, it was just massive volume. And he talked to me about how he switched from a 6,000 square foot warehouse. He moved from a 6,000 square foot warehouse to a 20,000 square foot warehouse. And how that was the most fun he had ever had in his time as an entrepreneur. And I could just think, really? That sounds awful. Like, wow, I'd rather have a root canal. There are these different skill sets out there. And when you see an entrepreneur latch onto what their skill set is, it is really fun to watch what they can do with that. Brad on our team, he knows content so well. He's just a smart guy in general, but he knows content so well and was very successful in acquiring content businesses. So being able to see his angle on these things is so refreshing. So I think that, the biggest surprise is often the perspectives that I get from people, and seeing how varied they are, but also how, for the most part, they're rooted in some really solid, justifiable positions, and just the vision that you see from entrepreneurs. It's different. It's different. They have a different vision. The successful ones, I should say.
Mark, I want to thank you for joining us today on the Buy Box Experts podcast. For those of you interested in learning more about Mark's brokerage firm, please visit quietlightbrokerage.com. Join us again next time on the Buy Box Experts podcast.
Thanks for listening to the Buy Box Experts podcast. Be sure to click subscribe, check us out on the web, and we'll see you next time.